So are you finally ready to buy your first home or start a family and plan to upgrade into a bigger unit for your kids to run around?
Yep, buying a home will probably be the one of the biggest milestone for many of us in our lifetime. But the journey of hunting your dream home is always the fun part though, isn't it?
Yes.
Searching for the suitable one, good location for your next 5 to 20 years stay, sending your kids to school within 10 minutes instead of 45 minutes, having a bigger yard for your plantation crave. Oh, in the MCO you must dream about that, right? Sounds good, huh?
However, buying a property is never easy. There are a bunch of processes that you need to be aware of. Getting a home loan will be the first headache that you have to deal with. It could take up to days or weeks, the anxiety of a long and winding process that you have to wait, pre-check your credit score, maybe not keeping your CCRIS records clean, pre-check your loan eligibility, preparation of sufficient documents, etc. There's a lot.
Yep. Today we are going to share with you 4 common mistakes Malaysians make when applying for a mortgage loan. What's up everybody, welcome to VC. My name is Vincent.
And I'm Chloe.
Yep, speaking about applying for a mortgage loan, many first home owners or investors make mistakes before they apply for a mortgage loan. So they ended up spending extra time, hassle, and delaying the process of financing a mortgage loan. If you didn't know, buying a property is required financing a home loan from the bank unless you are paying all in cash.
So taking up a loan basically means you don't have to fork up the money to pay the whole property price at once. For example, taking a 500,000 property, most people would not have that amount of money in their bank's account unless you're like 40 plus or 50 plus years old. I don't know, but it's unlikely to see people to have that amount of money in their banks. That's why taking up a home loan will help you to own the property, leveraging the banks while you're paying it through monthly installments.
Yep, there are different factors that might affect your loan, such as loan tenure, whether to take loan probably like 25 years or 35 years, which you can check out the video right there. We made it previously to explain should you go for a longer or shorter loan tenure. After deciding your loan tenure, the next thing you need to do is finance a mortgage loan. The first common mistake Malaysia makes when financing a mortgage loan is not keeping your CCRIS record clean. CCRIS is a short for the Central Credit Reference Information System, created by the Bank Negara Malaysia's Credit Bureau, which record your personal credit rating based on your outstanding loan or financing amount in the past 12 months.
The major areas covered by CCRIS are the outstanding credits, such as any existing personal loans, business loans, joint borrowing loans, car loans, etc. Secondly is the Special Attention Account, which refers to outstanding loans highlighted by a financial institution under special monitoring, which also means that it has been moved into special measurements in order to recover that loan.
Yep. Lastly, application for credit. It refers to all pending applications for the credit or those that have been approved within the last 12 months, which technically means that a request for an extension of credit.
To cut it short, banks will use this to determine whether or not you have a good credit rating, basically an estimation by banks if you're able to make the monthly repayments on time. Keeping your CCRIS clean essentially just means making sure you do pay off your loan repayments on time and in the right amount, such as car loans, your personal loans, credit cards, payments, and etc.
Yep. If you are consistent and reliable, which builds the trust between you and the bank, that is good to go. Banks will evaluate the borrowers based on your CCRIS. So make sure you're paying off your loan repayment and credit card on time, yo.
Speaking about trust level between you and the banks, CCRIS will justify your CTOS score with different levels. Now, what is CTOS? CTOS is a private institution that is Malaysia's leading credit rating agency. It is responsible for reporting on financial health of individuals and businesses with its extensive database of information.
Meanwhile, it is also a foundation for you to understand your essential financial history when it comes to checking your credit rating.
CTOS scores is actually a 3-digit number ranging from 300 to 850. If you have a poor scoring, which means you will have a difficult time financing from the bank. If you have a good scoring, banks will love you because they trust you as a responsible individual. You can also have a bad score if you have no credit history, as banks don't know who you are. That's why build your scoring earlier on before you decide to finance a mortgage loan. You can check out your own credit credit scores at ctoscredit.com.my.
Yep, after all of the credit scoring, trust issues, blah blah blah, the next thing that many borrowers neglect is the loan eligibility. You can't buy $1 million worth of home when your mortgage repayment is $5,000 per month while you are only earning $5,000. It means after you pay your mortgage loan, you left nothing for your living costs. No need to eat that. No need to eat that. That's why DSR comes in.
Now, what is DSR? DSR stands for Debt Service Ratio. It is a method used by banks to calculate whether or not you can afford the loan you're applying for. It is based on monthly net income and the total fixed existing debt that you have to pay each month. Then banks will decide whether the property you're trying to obtain is within your financial limits.
A DSR is calculated by dividing your total monthly commitments, including your existing loan and credit card debts, plus the monthly mortgage loan you are about to finance, then dividing your net income after deducting from EPF, SOCSO, and taxes. Lastly, times 100 to make it into a percentage. For example, if your net income is 6,000 ringgit and your total commitments are about 1,005, the mortgage loan you are about to pay will cost you around 2,000. So 1,005 plus 2,000 total divided by 6,000, that means your DSR is about 58.3%.
Depending on the bank, your DSR will indicate how much money the bank is willing to finance you. Generally, banks will not finance you if your DSR is over 70%, as you have too many financial commitments to keep up with your current income. So please double check your DSR before you even apply for a mortgage loan. Throughout our journey of being real estate negotiators, we do realize that there are a lot of people who failed to meet the income documentation requirement when they are applying for these mortgage loans. Normally, banks will need to see the relevant documents related to your income before you are able to apply for the mortgage loan. Documents such as your payslips, your bank statements, your tax form, which is your EA form, EPF statements, even deposit statements to show your saving habits. If you own a business, you might need to show your company bank statements, your business registration documents. If your documents are insufficient, your application will be unable to process. From our experience, some of our clients took way longer to prepare their documents and lose their booking with the property that they booked. As there is booking duration for each property, somehow there will be a penalty and amount for opportunity cost from the previous owner for subsale, houses from the secondary market, as they paid unexpected costs on managing the property. They're paying extra, that's not what they expected. Or maybe booking with a new development, and then your booking fee will be completely forfeited and completely losing your booking fee. We are talking about months though, not about like days and weeks. So some people took really long time. Yeah, so get prepared your documents, and that's why things happen when you need to be prepared in advance before paying the extra that you aren't expecting. Yep. The entire process of applying for a mortgage loan is troublesome and tiring. There's a lot to do before you even apply, and once you do, the wait time is often long and filled with anxieties, especially for first-time homebuyers or investors. It would be a hassle and annoying process day in and out.
From picking a suitable property in the right location, comparing the price, analyzing the market, understanding every details from different properties, applying for a loan, understanding your loan eligibility, credit score, gathering all the documents that you need for a mortgage loan. That's a lot of process.
I lost count.
Yeah. That's why sometimes it's better to have professionals to guide you along, someone like us, real estate negotiator, to provide you the suitable property, suitable guideline, and managing your home buying process smoothly. All you need to do is follow the instruction and you are good to go.
We hope that you've learned something new here, and we genuinely hope that your home buying process is going smoothly. Feel free to comment down below what is your experience on buying your first property. Let's have a chat.
So here comes the end of the video. Thank you for watching. If you gain some new knowledge from this video, do give us a like and consider subscribing, as we post a lot of property, real estate related content in this channel. Ring the bell, join the VC family, and we will see you in the next video. Ciao!